So this is lesson number 2. This is of course our lesson number 2. This is our lesson number 2 of what of course we had started earlier on, because yesterday's class Mwalimu gave us the whole bit of overview and whatever that would be expected of course to cover when we are talking about of course financial management. So in our lesson number 2, which will also be a very interesting case, because at this moment we will now be introduced, of course, to the component of financial management. And topic number 1, we will be expected, of course, to understand the aspect to do with the overview. That is, of course, overview of financial management. Overview of financial management. Overview of financial management. This is, of course, what we will always be expected to understand or to have at this point when we are introduced to the world of financial management. Interesting enough, yesterday when we were looking at, of course, the topics that would be expected to cover, there's one thing that we agreed, that from topic number 1 all the way to topic number 3, in this point, you'll find that we'll be looking at the theory part of financial management, which also makes it one of the most important concepts that you must be able to have. And in the same class, we agreed one thing, that theory part is also very important. So as we'll be starting our classes, of course, we'll be taking like 30 minutes of our time. We look at the theory part, then we jump back to the computation part. So our target today, I want us to clear the whole of chapter 1. Of course, I'd shared the notes earlier on. You guys have the notes from topic 1, topic number 2, and topic number 3. That one, I believe, we do have these notes. So what we will be discussing in the class today, it will just be a matter of whatever that you have in your notes, but Mwalimu will be giving us in a very brief manner, explaining some key areas and key concepts that you must be able to grasp. But otherwise, you'll find that the detailed notes, of course, you do have them. So at this point, I'd like to take this chance and, of course, introduce you guys to financial management officially, whereby we say that we will be looking at exactly what is financial management, what will we be expected to understand in the whole cycle of financial management. So to this point, let me share, of course, this bit. You'll you'll understand that financial management actually it is one easy concept, of course, if at all we approach it on a very practical perspective. And of course, as well, when we are just open-minded, you find that financial management will be one of the most easiest part that you must always tend to be able to do or to understand. So as Mwalimu is introducing us, of course, to this concept, I want, first of all, for us to start by understanding what is financial management. And in this case, I'll want to get your thoughts. Anytime we are talking of financial management, what will come at the back of our mind? As we mentioned, like our class will always be very engaging, whereby it will be a matter of us discussing so that at least we have a clear understanding, because our goal is what? Learning. Our goal is learning. Our goal is learning. Our goal is to learn. Our goal is to learn. So I want to hear probably some of your concepts in relation to financial management. Maybe at this point, if I ask, say, like Ashley. Ashley, anytime you see financial management, what will come at the back of your mind?
In short, managing money.
Money. What about money? What will you be doing with this money?
Managing.
Managing money. Managing money. Managing money. Okay. Ball. When you hear financial management, what will come at the back of your mind?
I think what comes in my mind is it involves, I think, raising funds. You need to raise some funding, and then after you raise the fund, you invest them in whatever you think is profitable, and then possibly distribute the profit with those who provide those fundings. I think that's what comes to my mind when it comes to financial management.
Great, great. Raising this cash, of course, at the end of the day, after investing, then we distribute whatever that we've gotten, of course, to those people who had invested this cash. Nice angle. Very good. Nice angle. You've looked at it. Catherine, what will come at the back of your mind when you see financial management?
Yeah, they said that financial management deals with the proper use of financial assets of an institution.
Proper use of financial
ensuring
assets
that
of an institution. Nice angle. You've looked at it. I'm not sure if for today Eric Maxime is in a position to say something. Eric Maxime, are you in a position to talk to us?
Okay, I'm in a position today to say something.
Oh, great.
Okay,
what do you think?
Okay, FM might be, I understand this as the process of coordinating, planning, and organizing financial resources to meet the set objective of an organization.
Coordinating, planning. Okay, the key element is to meet the set objectives of the organization. Nice angle.
Yes.
Good. Nice angle. Good. Nice angle. Yes, Kanana, what is your thought on financial management?
My review, it's applying the management principles or financial resources of an enterprise by making sure that they are utilized in the right manner.
Utilization of financial resources in a right manner. Nice angle. You've looked at it. Muslima, what is your thought? Anytime you see financial management, what will come at the back of your mind?
Yeah, it's the process of directing the limited financial resources of an organization to ensure that they are directed towards they are utilized in the most efficient and effective manner.
Proper utilization of resources within an organization. Yes. Vero, what is your thought? Yes, Vero. Acha, what is your thought when you anytime you see financial management?
Financial management for me is a process where the organization puts in use the funds make available to achieve a particular objective.
A particular objective. Yeah, at least you see that's the beauty part with the discussion, because it will tend to always open our mind wide in understanding, of course, the whole bit of financial management. And the beauty part of it is that at least all of us, we have an idea of what financial management entails. And in that case, you'll find that I won't dispute what you guys have mentioned, because at least you're bringing in some concepts in relation to organization. You're bringing in some concepts in relation to utilization of resources. You're bringing in, of course, the aspect to do planning, which is very good. So as much as we don't have a very clear definition of financial management, but in a very simple term, of course, we can always look at financial management, of course, as a discipline or maybe aspect of maybe you can term it as a discipline or maybe a study, right? That is concerned with the planning, organization, of course, and control of the firm's financial activities. So these are what Mwalimu is saying, that a very simple definition that, of course, you can always tend to give anytime we are looking at, of course, financial management. This is what we can always tend to have. Let me share with us right here. So this is what financial management entails. We're saying that simply financial management is a discipline or a study that is concerned with planning, organization, and control of a firm's financial activities. A very basic and simple definition of what financial management entails. So it is important that we do understand that financial management, the whole framework, is basically rooted in ensuring that there's an optimal allocation and management of resources. The whole bit now, the whole framework of financial management, you are literally saying that this is rooted, of course, in ensuring that there is optimal allocation and management of resources to maximize what? To maximize the firm's value. Maximize the firm's value. So you'll find that the whole bit of financial management, it will always focus on the three pillars. These are the pillars of financial management. With the lack of better word, if at all, you can talk about the pillars. Yeah, pillars of financial management. Pillars of financial management. Pillars of financial management. You find that anytime we are to talk of financial management, of course, it will always be rooted on these three key pillars. Pillar number one, it is always about what? Investment decisions. You realize that many times in finance, it will always be about decisions. So if you talk about the pillar number one here, we have to understand the aspect to do what? Investment decisions. Okay. Number two, of course, we must be able to understand the aspect to do with financing decisions. That is number two, financing decisions. So about, of course, these are financing decisions. Yeah. Number three, we have to be able to understand that we'll also be dealing with the concept of the dividend policy decisions. We'll be dealing with the dividend policy decisions. And if you are keen enough, you'll find that these key pillars, ideally, they are also part of the topics that we'll be covering in financial management. If you're keen enough, you realize that the pillars that you're talking about here will also be part of the topics that we'll be covering as we are dissecting this concept of financial management. So, in this case, one will ask, Mwalimu, when we are talking about investment decisions, what are we looking at? So you'll find that when we are analyzing investment decisions, the whole bit, this is where, these are simply determining, of course, where and how to allocate our capital in projects or assets. This is investing. I want to put my resources somewhere. So what is the best place that we can put these resources? How are we going to put these resources? See, so this is what you're looking at, investment decisions. This is what you're looking at, the investment decision. Is simply the aspect of us determining where and how to allocate our capital in projects or assets that we do have. We go to financing decision. At this point, I have already decided where we can put our resources. we need to analyze ourselves. Do we have this enough resources so that we can put these resources here? Now, where will we get these funds? This is where the aspect of financing decision will come in play, because financing decision is simply deciding the best mix of debt and equity financing. Because at this point, remember, we want to invest. And in this investment, I'm going to put the financial resources from the definition that we've looked at, financial management. So then, at this point, where will these sources come from? I'll be having debt and I'll be having what? Equity. So that combining these resources, of course, it will then help us to do what? To put our investments. The third pillar, which in this case, you're talking about what? The dividend policy decisions. What about this dividends policy? Just as I think it was, Bol, yeah, Bulain had mentioned to us the aspects of these people that they have invested. Of course, they will need to be paid back. They will need to get the return on the investment, and that is where the other pillar, which is very important, will come in, the pillar of the dividend policy decisions. This is where this pillar will come in play, the dividend policy decision. So when we are talking about the dividends policy decision, my good friends, you are looking at simply establishing the optimal dividend payout policy that, of course, will always tend to align with the firm's goals, that will always tend to align with the firm's goals. These are what we are looking at. So at all times, in the event that we are looking at financial management, my good students, I'll always want us to remember the three pillars. That is investment decisions, financing decisions, dividends policy decisions. And you realize throughout our course, these are some of the topics, of course, that we'll be getting as we proceed. You realize that these are some of the topics that many a times we'll be looking at. We'll be looking at these topics, of course, as we proceed. So we are done with this part of us, of course, understanding the aspects of what financial management entails. Now, the most or other important element will be, what are the roles and responsibilities of finance managers? What are the roles? You are employed there as a finance manager. What will be your role, given the fact that this cash or this investment is not yours? This investment is not yours. All you are doing, my good students, here is that you are holding or you're managing these investments on behalf of the investors. So what would be the role of course, finance managers? So these are what I also want us to look at right now, the roles of finance managers. Roles of finance managers. Yeah, roles of finance managers. What could be the roles of the finance managers? Of course, in the organization. Yeah, a very interesting bit. So looking at the roles, you'll find that this manager ideally is a core element between every investment that the investors are doing. And in terms of investors, you'll find that we are going to look at it in aspects of various cases, which will include, I'll have to look at the role of managers to the people who have invested. In this case, we're looking at who? Shareholders. What will be the role of the finance managers in the people who assist in running the business? These are employees. What will be the role of finance managers in relation to the government? Remember, like, taxes are always there. So what will be the role of course, the finance manager when it comes to the government. And at the same time, I am not operating in space. We are operating in an environment which has been built by community. So again, what would be the role of the finance manager in the society? See, so in this case, we are going, of course, to widen our antennae in a sense that we need to dissect the role of finance managers in all these categories. And that will come for the case of exams. In the event that you're looking at or you're being asked to describe the roles of finance managers, always make sure that you're not confined within a specific space. I'll always want you guys to always think beyond the four walls. And in that case, you realize you can come up with a lot of solutions to that. So in this case, we are agreeing, we want to look at the roles of finance managers in relation to, number one, talk about shareholders. Okay? We have to, of course, analyze this in terms of shareholders. Number two, we have to look at the roles of finance managers on the side of employees. We must also be able to look at the roles of finance managers, of course, in relation to the government. At the same time, it will be important for us to understand the roles of finance managers in relation to society, because you'll find that the finance managers are the persons who are representing now our business. So in this case, we have to dissect their roles into these categories. I want us, my good students, of course, to start with the roles of finance managers to shareholders. I want us, of course, to start with the aspect of the roles of finance managers to shareholders. Yeah, roles of finance managers to shareholders here. Shareholders. Dissecting this. Roles, of course, of finance managers to the shareholders. It is important to understand that these are the investors. These are the people who have put their cash, of course, in the business. So you'll find that finance managers will always tend to play a very crucial role, of course, in aligning the firm's financial strategy with the overreaching objectives. Of course, considering the interest of each and every person. And that's why the first person that we're looking at here are who? Shareholders. So when you are looking at the role of finance managers to shareholders, let me ask this question. If today maybe Catherine, today you've invested in a farm, what will you be expecting to get on your investments? We are looking at it practically. Catherine, you've invested. What will you be expecting to get in your investment?
Okay, I'll be expecting some returns at the end of the activities that I'm going to carry out. Hello?
Huh? Of course, expecting the returns.
Yeah, returns.
Mm-hmm.
Yeah.
Good. Great. Vero, you've invested in a farm today. What will you be expecting to get in that farm?
Can I try?
Yes, Sacha. Yes, please.
I think the person will be getting dividend, because at the end of the year, he has to be given dividend paid annually.
Dividends, these are basically the returns that you're talking about. Good. So you find that looking at whatever that I'll be expecting, number one, of course, is to maximize my wealth. So the first role in this case, we can have as what? Wealth maximization. So about wealth maximization. This is about, of course, really about wealth maximization. Wealth maximization. It is the first role of course, finance managers to shareholders. And we're going to explain this. You'll find that in relation to wealth maximization, you'll find that, of course, why are we employing these finance managers? Is to make sure that because they have the knowledge, they are making the investments on our behalf as shareholders. So that at the end of the day, what will of course lead to, in this case, it will be my wealth should grow as an investor. So you find that as at the end of the day, in terms of wealth, we do about, of course, I'll be receiving higher dividends. In such a case, if at all you're to look at it on that angle. So you find that wealth maximization, in a very brief statement, I want us to mention and say that the primary responsibility of the managers, underline the word primary. So we are agreeing here and say that we're saying that the primary responsibility of the finance manager towards shareholders is to maximize their wealth. In this case, I can actually put it for you guys here. The primary responsibility of the finance managers, of course, towards the shareholders is wealth maximization. Very important to note. Wealth maximization. I know one will ask, Mwalimu, how? That will be the next question. How? So you find that, of course, this involves making decisions. And who are making these decisions? Finance managers. Making decisions that increase the firm's value. Making decisions that increase the firm's value, leading to higher share prices and dividends. That is how the wealth of the shareholders will be maximized. We're saying that this involves making decisions that increase the firm's value, leading to higher share prices and dividends. That is very important to note. Number 2, role. In relation to the same, we can talk about now the aspect of, so we talk about, of course, return on investments. Talk about return on investment. I'll put my cash there. Of course, I should expect some return on the same. So return on investments. What about return on investments, my good students? You'll find that the role of the finance manager will simply be to ensure that there's adequate return on the shareholder's investment. How will I make sure that there's an adequate return on the shareholder's investment? Of course, this is through what? Efficiently managing the firm's resources. By efficiently managing the firm's resources. By this, I'm going to make sure that this investor is actually getting adequate return on his investments. Very important for us to note. You're talking about ensuring that there's, of course, adequate return on investors. This is what you should be having, of course. Very important. What will be another role of finance managers to shareholders? What will be another role of finance managers, of course, to shareholders? In this case, you can talk about key element, which is what? Transparency. Because later on, you realize that we'll be talking about, of course, the urgency theory. So the agency theory is always that relation between, of course, the principal and the agent, where at this point an agent is not honest. You'll find that many a times there'll always be conflicts. So also the role of the finance manager to the shareholders, we'll be talking about what? Transparency. Very important. We read about transparency. Transparency, very, very important here. Very important. So when we are looking at transparency, my good students, our focus majorly is what? To maintain a very clear and transparent communication with the shareholders, ensuring that they are literally informed about everything that is happening in the farm. The same case today, maybe you are an employer. In this case, there are employees working under you. What you should always expect from them is for them to be very transparent with you. Whenever things are not going right, you should always expect that they should always tend to tell you. They should be very open in a sense that they should tend to always explain anything that is not happening correctly. The same relationship will also exist, of course, between the shareholders and these investors. Kindly just be transparent with me. Tell me as an investor whatever that is happening. So transparency is also a key role that finance managers, of course, should always be having, or should maybe in this case have to the investors. So in this case, in a very simple manner, these are what you're saying. In a very, very simple manner, we're saying that as at the end of the day, these finance managers should be transparent. And by transparency, this is what we say, maintaining clear and transparent communication with shareholders. So this is important. We can have a lot of items here. You can have a lot of elements in relation to the roles of course, finance managers to shareholders. Let us go to employees. What is the role of finance managers to employees? I know you have these notes. Whatever that I'm giving you now is simply in a very brief manner. You have the notes already. Whatever that Mwalimu is trying to do, Mwalimu is trying to give us these notes in a very brief manner. So whatever that we're having, I know we have explained them in details, whatever notes that Mwalimu shared. So looking at it in the case of employees, in this case, I want us to have a very open conversation right now in the next 1 minute. What do you think are the roles of finance managers to employees? You as an employee, literally, what will you be looking at from your manager? What will you be looking at from your manager as an employee? What will you be looking at from your manager? Purity, what do you think? What will you be looking at from your manager?
I think
Who's your employer?
I think
Payments of salaries.
Pardon? Purity, Nikama, I've not gotten you clearly there. You said what?
I think as an employee, I expect the manager to do the delegation of duties.
How will delegation of duties assist you as an employee?
It is to ensure that an employee does whatever they're supposed to do, as in whatever they are best at doing.
An angle, which is okay. Lucy, what do you think? What will you be looking at from your employer or this manager now? Your thoughts? Lucy, she's trying to unmute. Yes, Vero, you want to assist Lucy as she's trying to unmute?
So I will ensure that our salaries are being paid on time and I'm being rewarded in terms of my performance in that particular organization.
Mm-hmm. Reward. Mm-hmm. Good. There's an aspect, of course, I'm looking at what I'm going to get. These are job security that you're focusing on. Mm-hmm. Good. Eric, what is your thought? What will you be expecting from your manager? Eric, your thought? You're waiting.
Okay, I'm thinking that the manager should be able to pay salaries on time, salaries and wages on time. So at a point whereby they cannot pay salary and wage on time, they are doing bad in terms of financial management. Yes.
An angle, good. An angle, that is a good. Ashley, your thought? Yes, Catherine, you want to tell us something?
Yes, the manager should ensure that the employees' welfare is well taken care of. Employees' welfare in terms of working environment. Yeah.
Good. Yeah, at least make sure that I'm working in a very secured environment. So these are some of the questions that they're always very open. Which in this case, if at all you're not confining yourself in a particular space, you'll get a lot of answers here. So amongst, of course, the roles that, of course, majority of us we mentioned, which we'll be expecting from a manager, is the aspect of job security and compensation. Yeah, there's that aspect of job security and compensation. Job security and compensation. These are very key. Because you'll find that in this case, financial management decisions can always impact the job security in terms of the way Eric was telling us that if at all I'm not being paid on time, it means that probably there's a financial issue with the firm at times. So at times there are always normal delays. So you'll find that in this case, you find that by making sure that, of course, my job is secured. In this case, I'm getting other benefits I'm expected to get. So many times you find that finance manager must always ensure that the firm is financially stable at all times to make sure that we are catering for these few compensations. So in this case, in a very brief manner, we can, of course, agree and say that amongst the role in relation to, of course, job security and compensation, we can say that a finance manager must ensure the company is financially stable enough to provide what? Fair compensation and job security. Very important. Very, very important. The other role that, of course, you can also argue here when it comes to matters to do with aspect of to the employees. In this case, of course, part B, we can always tend to talk about the key element that we normally refer to as what? Career development. One of us had mentioned about, of course, delegation. In this case, you're delegating something that you ought to have done. So in this case, you find that whatever that you're doing for me, other than me just assist the company, there's a way that my productivity is also increasing. And of course, I'll be learning what? I'll be learning new concepts. So in this case, you are talking about what? Career development. We are looking at, of course, career development here. And in career development, Mwalimu is saying that very briefly here, we're talking about allocation of resources for training, allocation of resources for training, which in this case I'll just share with us here. This is what, of course, we are looking at. This, of course, what we are looking at. We're about, of course, allocating resources for training and development, which helps in employee growth and contributes to the overall productivity of the firm. These are important to note. So, also in relation to the same, of course, we can always argue on the aspect of what? Aspect of ethical practices. In a sense that at all times, of course, finance managers should always ensure that there's that culture of ethical financial practice that will ensure, of course, what? Fairness and avoid exploitation. So that in this case, I should not identify that probably Ball has a very good talent, but whatever that he's doing is not matching what is being compensated. Or in this case, of course, at some point, we should also be providing trainings in relation to matters with financial investments, of course, to who? To employees. So these are some of course, the roles that you can always tend to talk about. The other bit here, we look at on the side, of course, of the government. We can have a look at on the side of course, the government. We have in government, the government. I know at this point, all of us, you must be having points to mention. The government, yeah? Of course, there are also finance managers to the government. They are quite, we do have quite a number. But majorly, we'll always be talking about what? The aspect to do with what? Compliance. We do about the aspect to do with what? Compliance with laws. Because compliance is so wide. This aspect of taxation, this aspect to do with the licensing is so wide. So the first role here, we can talk about compliance. We can talk about, of course, compliance with laws. Compliance with laws and regulation, or simply compliance with laws. Compliance with, of course, laws and regulations. Very key element to note. Compliance with laws and regulations. In a sense here, my good students will find that the finance manager, yeah, must ensure the company complies, of course, complies with all relevant financial regulations and laws. These will include, of course, aspects to do with tax. We're having financial reporting standards, see? All the aspects to do with the anti-corruption laws. Just making sure that, of course, we are complying with all these laws, and regulations. The other bit would be timely and accurate reporting. This now matters to the tax. Timely and accurate reporting. Timely, of course. Timely and accurate. Timely and accurate reporting. Timely and accurate reporting. Timing and accurate reporting. That is very key. In a sense that maybe if I told you to explain it in a very brief manner, you'll find that it is the role of course, finance managers to submit financial reports and, of course, the tax filings on time and ensure that there's accuracy, of course, in these financial statements. How will it help the firm? It will help, of course, to maintain integrity of the financial system. That is very important. That is very important, of course, to do it, to have it in mind. And so many other points that you can talk about there, including, of course, contribution to economic stability. Because it is the SMEs which normally tend to make sure that at least the government economic is stable. So about ensuring economic stability. Economic stability. Ensuring economic stability. Yeah, ensuring economic stability. This also, of course, a role in terms of what when it comes to government. We have society. We have society here. We have society. What about the role of course, finance managers to the society? This is also another key area that, again, we must always be able to consider and have in mind. When we are talking of society, we're looking at it on a very wider perspective, which will include the aspect of CSR, corporate social responsibilities, where in this case, of course, we expect finance managers to be responsible for aligning their financial goals with the social objectives. At times, these will always include allocating some funds maybe to do what? To community development and other CSR activities that we can always tend to come up with. You see, so one of the main goal or maybe role of finance managers to the society is the concept of CSR, corporate social responsibility. Corporate social responsibility. That is key. The other role here we can talk about, of course, is what? Aspect to do, like right now we are preaching a lot about what? Of course, environmental conservation, or rather conservation, in a sense that at any given point in time, we should always make sure that we avoid pollution as much as we can. In this case, there's a green accounting. I'm not sure if you guys, you have, at least you come across the concept of green accounting. This, of course, is in relation to do with what? Of course, environmental conservation, which is always very key. We are talking about global warming. What will be our role as finance managers to fight that? Whereby in this case, of course, if it is planning, I should always tend to plan in a sense that we control pollution, because at the end of the day, it is pollution more so in manufacturing and so many industries that cause, of course, this global warming. You find that there are so many things that you can do when it comes to society. So all we need to do is to literally be very open-minded. There's that aspect, of course, of other than CSR, there's that aspect of economic contributions. Economic contributions. In this case, you'll find that amongst the key role, of course, of any firm is to provide what? As aspects of course, opportunities, job opportunities. And if we create employment to these people around, what will that in turn lead to? In this case, we'll find that it will improve their lives. There's that aspect of economic contribution that the firm, of course, is doing to these industries around, or rather to the society. So you'll find that looking at it in that perspective, trust you me, you can come up with a lot of points. Don't be limited by confining your mind to probably whatever that you've studied. No, at this point, this is always the best time to make sure that you're very open-minded. My good sense, you'll come up with a lot of points. So that is in relation to the goals, of course, or the roles of finance managers. When it comes to matters to do with, of course, aspect of these stakeholders that we've looked at. Remember, you can always tend to talk about creditors. There's a role of finance managers to creditors. There's a role of finance managers to suppliers. There's a role of finance managers to customers. It's so wide. And having that mind, I believe we can always tend to relate. And the beauty part is that, of course, I've also given you clearly in our what? In the notes that we've shared. We have this, of course, in our notes. Now, we jump to another important concept, another key area that we must always tend to have in our fingertips, if at all we are to understand the finance, or rather financial management as a whole. This should take us to the goals of a firm. This should take us to the goals of a firm. So you're looking at the goals of a firm. So here, this should take us to another key element. Goals of a firm. Goals of a firm. I want us, of course, to consider what are some of these goals of a firm that you must always tend to consider. Goals of a firm. Goals of a firm. For exam purposes, the question for goals of a firm is always very notorious. So it will be important that if at all you to consider this, again, we should be very tentative. We should be very tentative on this. When we are looking at the goals of a firm, my good students will find that these are simply the objectives that a firm seeks to achieve to ensure growth, my good students, to ensure profitability, and of course, sustainability. So these are what we are looking at, simply the objectives of the firm. And in this context, you'll find that the goals of the firms will always categorize them into two. That is, we normally tend to talk about what? Financial objectives or goals. That is, of course, the first category that we normally tend to talk about. These are, of course, the financial objectives. Financial objectives. And number two, we normally tend to talk about what? Non-financial objectives. Non-financial objectives, of course. Non-financial objectives here. These are the goals of the firm that you normally tend to look at. Two main goals. There's that aspect of financial objectives, and we are having, of course, as well as the non-financial objectives. Let us dissect the first one, financial objectives. I want us to dissect the first one. Here, we are talking about financial objectives. Financial objectives. What are some of the financial objectives of the firm that we must always tend to consider? Financial objectives of firm. Of course, as always, any given firm, they'll always tend to talk about what? Profit, right? So, of course, at this point, maybe just to explain even before you go to maybe examples of this, you'll find that the whole idea, in quotes, when you're looking at financial, all we want to do here is, these are simply objectives that are simply concerned with maximizing the firm's economic value. Yeah? These are simply objectives, of course, that are concerned with maximizing the firm's economic value and ensure that a long-term financial health, ensuring that, of course, there's that long-term financial health. So everything is attached to what? Of course, an economic factor. An economic factor. That is what we'll be looking at under, of course, financial objectives. And on financial objectives, you're saying, of course, at any given point in time, any company, not unless it is an NGO, all these other companies are set with one thing in mind. Other than the value that they are giving, also profit is always very key. Profit maximization. Profit maximization. So that is, of course, one of the most important objectives of any firm when you have to look at it in terms of what? The aspect of financial objectives. So we start with the first one here, financial objectives. You said, number one, we are talking about profit maximization. Profit maximization. This is very key. I believe we have these notes. The same case, of course, can always be shared, but I'm confident that we have these notes. So in relation to this, just to give you a brief on the same, you'll find that the primary financial objective of any firm, yeah, these are the primary objective of any firm is profit maximization, which basically refers to the firm's goal of increasing the net income. Profit maximization, simply on a very layman's perspective, we are looking at it in a sense that we're looking at the firm's goal of increasing net income by optimizing revenues. And as much as we are optimizing our revenues, we are also controlling our costs in a way. We are also controlling our costs in a way. We're also controlling our costs in a way whereby, look at it in this case, number one, we are maximizing or optimizing our revenue. At the same time, we're trying as much as we can to reduce our costs. So in turn, you'll find that what will happen? Our profit will always tend to increase. Profit maximization. The other bit here will be about what? Wealth maximization. Will be about wealth maximization. So part B here, we're having wealth maximization. See? Wealth maximization. This is also another key element. My good students, when you read about wealth maximization, what are we focusing on? Remember, profit is so different from wealth. Profit is so different from wealth. This is what we should understand. So when we are talking about wealth maximization here, our focus, of course, is in relation to the firm's share price and dividends payout. This is what I'll be earning all through. So for profit or wealth maximization here, we're looking at what? The shareholders' wealth maximization. Mark that very well. Mwalimu is saying that when our focus is taken to wealth maximization, we are looking at the shareholders' wealth maximization, which will involve increasing the firm's stock price, talk about aspects of dividends payouts. You see, in this case, of course, providing higher returns to shareholders. This is what we're about what? Wealth. Profit, it deals with optimizing revenue and reducing what? Cost. That is profit maximization. Wealth maximization, we want to increase the share price and dividends payout. Ideally, we are looking at returns to shareholders. So get that difference, my good students, between wealth and profit. Get the difference. Get the difference very well. Okay. Another objective will be what? Cash flow management. Cash flow management. This is also another financial objective. And when we are talking about cash flow management, this is simply to ensure that we do have positive cash flows to, at any given point in time, to maintain liquidity and meet these obligations. Like the way Eric was telling us, if at all I'm being paid late, it will simply indicate that you're not performing well. So in such a case, we find that these the salaries. Salaries is obligation to the company, or rather to the company in that case. I have suppliers to pay. In this case, you'll find that this is also an obligation, which will always be met if at all there's a proper cash flow management. When you're having a question, make sure that you ask kindly. We're having cost efficiency. We're having, of course, the aspect of cost efficiency, controlling our cost. This is also a goal of the farm, cost efficiency. We want to look at a case of how can we control, of course, what? How can we control our costs? Cost efficiency. In a sense that the more I reduce our, of course, the more we reduce our cost, the higher the profit that we're going to earn. So reducing operational and capital cost to increase the profit margins. And in that case, you'll find that in turn will also improve the farm's competitive position. These are some of the things that we should always tend to consider. So for that, before we go to non-financial, of course, objectives, I want to give you guys a break of 5 minutes. Then we come and continue with non-financial objectives. Then we come and continue with non-financial objectives. The first case, we were looking at financial objectives. The other bit here I want us to talk about, of course, will be what? The non-financial objectives. And in this case, I'm giving you a break of 5 minutes. Then we come and continue. Okay, I believe that break was enough. So we are looking at the non-financial objectives, because remember we mentioned that at this point we are looking at the goals of the firm to be two: financial objectives as well as non-financial objectives. Basically, we have looked at financial objectives. Our focus now is on non-financial objectives. I know one will ask Mwalimu now, when you hear about non-financial objectives, and you know very well, of course, at this point, the firms need to make profit. What are these non-financial objectives that you're talking about? What are these non-financial objectives that we are talking about? You'll find that simply if we are very open-minded, then these components will always tend to flow. So the first case, when you hear about, of course, non-financial objectives, we should understand that key elements are simply, of course, the objectives. These are objectives that focuses majorly on elements beyond direct financial performance. Yeah, they go beyond elements of financial performance, but at the same time, they're also very crucial to the firm's long-term success. As much as you're not focusing majorly on the financial part, but as at the end of the day, they are very, very crucial when it comes to the firm's long-term success. What are some of these items? There's an element that we normally tend to talk about: what? Customer satisfaction and loyalty. Customer satisfaction. This is very key. It's a non-financial objective, but you'll find that it is a very key element. Customer satisfaction. Customer satisfaction. For customer satisfaction, you'll find that this is always the norm. If at all I am impressed with the service that you're giving me, if at all I am impressed probably with the product that you are having in this case, or maybe the way you approach, you see, the way you interact, you see, the way you listen to my issues, this is non-financial part. But as at the end of the day, what will it give in turn? In this case, you'll find that as at the end of the day, there'll always be, if at all not referrals, but this person will stick with you all through, will stick with your service, or will stick with your product all through. Because whatever that you're giving, more so the quality. You see, because it is a quality that will increase the value that you're giving. So the quality of a product or services, so long as it has met the customer needs, trust me, even the price won't be an issue. Some people will be offering the same price at maybe $10, and you are offering the same price at $30, and you're going to get customers because they believe on the value that you are giving them. They believe on the quality that you're giving them. So as much as this person is charging probably $10, focusing maybe on economies of scale, this other person will charge $30 because this person believes on the quality that is being given. So what will that in turn lead? I'll be very loyal to your service. Regardless of how things are, I'll always be with your service. So you'll find that enhancing quality of products or services to meet your customer needs is very key element. And this is what companies normally tend to do. And many times, most of us, or most of you, you normally call that as what? The brand loyalty. Why is it that in Kenya, majority of people, basically, they have stuck with Safaricom for so long? Why is it that some are on Airtel? And now, of course, when it comes to internet, there's now Starlink, right? The aspect of customer satisfaction, very key. That is an non-financial objective, but it will have an impact on the firm's long-term success. The other part you read about corporate social responsibility. corporate social responsibility, the CSR, corporate social responsibility. Yeah, talk about, of course, the corporate social responsibility. This is also very key. Yeah, today just decide that, you know what, as much as we are not gaining in this case, we are donating probably some stuffs. In this case, you just decide like, you know what, for example, if at all you are in this learning industry, at times, and we normally tend to do this, of course, always the first and sometimes the second semester of the year, we normally tend to offer sponsorship. You see, giving back to the society. It is non-financial, but it is always very key. Non-financial, but it is very key. Corporate social responsibility, where in this case we find that we are adopting to maybe sustainable practices and contributing majorly to the social well-being. That is very key element. The other key element that, of course, we can also talk about when it comes to non-financial, talk about, of course, innovation. I'm going to explain why we are having this as non-financial innovation. My friends and my good friends, things are changing very fast, right? Things are changing very fast. Technology is going at a very high speed. So you'll find that continuously investing, of course, in research and development to innovate and stay ahead of competitors will always ensure the long-term growth and relevance in the market. Just like the other day, I was showing you guys a good example. Let me talk about Mdarasa because you're part of this anyway, right? So you'll find that the other day, I was showing you guys about our new platform. And I dared you, like, look at any institution around, either in Kenya or basically East Africa, give us an institution that has capabilities that we've given you guys on the platform, on our new platform. It's simply unique. This is an innovation, of course. As much it is an unfinancial part, right? But you'll find that the experience that we are giving to our clients is literally so unique, right? And in that case, we'll find that it will have an impact, of course, in the long-term growth of the farm. So innovation is also a very key element and among the financial objectives when it comes to matters to do with what? Matters to do with non-financial objectives. And so many other points, my goodness, you can look at when it comes to matters to do with what? Non-financial objectives. So that is important. That is important to note. Then the last part on this topic, because I told you guys that today we are going to finish topic 1. Today we are going to finish topic 1. In this case, talk about the aspect of urgency theory. I told you guys that today we are going to finish topic 1, and actually we are finishing topic 1, right? So about urgency theory, a very interesting part and very notorious, of course, when it comes to examination as well. So we're having the urgency theory. Here we are talking about the urgency theory. So let us talk about the urgency theory. I know whatever that Mwalimu gave us in our notes, they are very detailed. What I've just done simply, I've just summarized the notes. And I've given you in brief. We summarize the notes and I've given you guys what? In brief. Urgency theory, of course, will be your last part in this topic. Looking at urgency theory, right? At this point, maybe you've been tasked with the responsibility of performing a particular task. That is not your task. It is a task, of course, of what? Of say, like maybe talk about, of course, the aspect of maybe your boss or maybe the company. At this point, maybe, for example, your lecturer here. In this case, I've been employed by Mdarasa to give you what? To give you this tuition. I've been employed by Mdarasa to give you the tuition. So you'll find that I'm performing a task on behalf of M. Darasa. M. Darasa is my principal, and I am the agent of M. Darasa. So you'll find that these are relationships between two persons. There's one performing or acting on behalf, and there's a one giving the task. You see? So anytime, my good students, and that, of course, it is bringing us from the definition. You look at the definition of what we mentioned. Starting from the definition whereby we read about financial managing being a study that is concerned with the planning, organization, and controlling of the firm's financial activities. In this case, who are the persons doing this? They are the finance managers. And that's why we talked and we looked at the roles of finance managers. So when it comes to the agency theory, we are looking at there are these finance managers and their shareholders have been given a task to perform on behalf. You see? So in a very simple term, anytime we are looking at the agency theory, my good students, anytime we are looking at the agency theory, all I want us to understand here is simply the relationship between principals. Principals are literally the owners or shareholders, and agents. Agents are now the managers and the executives. Within what? Within a particular organization. This is what we are referring to as what? Of course, that agency theory. A very interesting area. So, in a very brief manner, we can just mention something and say, of course, whatever I've just shared with you. In this case, of course, let me share with us here so that you can put it down in a very brief manner. In a very, very brief manner. That agency theory, of course, is a relationship. Yeah, this is a relationship. Is a relationship between, of course, principals. In this case, you're looking at principals as the owners and shareholders, and agents. Agents, in this case, you're looking at managers and executives. within an organization. Where, in this case, you'll find that many a times there'll always be conflict. People will always tend to cross each other. There'll always be conflict. Probably, I am feeling like maybe you're misusing me. This other person is feeling like at this point you're not performing the way I'm expecting. So at many a times, there might or there will always be concept to do with what aspect. People will always tend to cross each other. People will always tend to have conflict. So the reason why we are actually studying the agency theory, number one, other than us learning this relationship, it will also be important for us, of course, to do what? To identify the causes of conflict. I'm having, say, like managers and employees. What would be the conflict? I'm having, say, managers and shareholders. What would be the conflict? What would be the cause of this conflict? And at the same time, how are we going to resolve this conflict that has come about? So at this point, agency theory, so long as you are able to understand from the word go that what you are looking at here, my goodness, is simply the relationship between the principals and agents. Even if at all you're to ask to give the conflict, what might be a conflict between you and between the shareholder and the manager, then you can come up with a lot of points. Then you can come up with a lot of points. So probably another dash on that you can add and say that it focuses on the conflicts that arise. We're saying you're putting something there. We're saying that it focuses, full stop continuation, it focuses on the conflicts that arise when the interest of the agents, it focuses, that is agency theory. It focuses on the conflicts that arise when the interests of the agents differ from those of the principals. It focuses on the conflicts that arise when the interests of the agents, of course, differ from those of the principals, So anytime we are talking about the agency problem, this is simply divergence of interest. Divergence of interest, because people will always tend to disagree. In one way or the other, people will always tend to disagree. So in this case, in our notes, I think I've given you in details in relation to this. So this one favor that Mwalimu will want us to do. On our notes, I want us to go through agency theory, looking at it inside out, focusing on the main, of course, problem or causes of this conflict and resolution of the same conflict, So by doing that, of course, if at all you'd be having any question, then in our next class, you can always tend to, of course, ask a question on what you might have gone through. And in that case, of course, Mwalimu will always be here to assist us. So that, because today we've literally looked at the whole of the theory, remember Mwalimu mentioned that we'll always be balancing for the purpose of the strategy that we'll be having to make us clear all these things in advance. Will always tend to balance. So that is to say, in our next class, we will look at a computation topic, which in this case, of course, that will be topic number 4, the time value of money. And we said that the time value of money is literally the heart of what? Is literally the heart of financial management. So I want us to meet in our next session, whereby, of course, we are going to analyze the concept of the time value of money. And at this point, I'm requesting us to take advantage of the videos that we have, of course, in our accounts, in our platform. Just make sure you've gone through the time value of money before our next class. So that when we'll be introducing the time value of money in our next class, you will not be starting from scratch. You'll be having an idea of what the time value of money is. So this point, now unless there's anyone with a question, Mwalimu will want to wish us a very good night. Any question? Great. So you guys have a good